One Step Ahead by Lundquist and Beslick.
Welcome to One Step Ahead Radio. Another week, another session. James and myself are here to talk a bit about what's going on around the world. James, welcome. How are you doing today?
Hi, Sasha. How are you doing? Yes, I'm very good. Happy to catch up with you again. Hello to all of our regular listeners and new listeners out there to get our weekly wrap up and catch up and discussion on what's happening in the world of sustainability and ESG, which never ceases to be a dull moment.
No, not at all. I mean, there's plenty of things happening every week. But James, how are you doing otherwise? I mean, what you up to right now? What's the sort of top of your agenda for the moment? I mean, given what's going on in the world, and the company you're working with.
Well, what's going on in the world for us here in Europe, the whole corporate sort of dilemma and sort of everyone sort of waiting to understand what's happening with the omnibus package coming out of Brussels and trying to simplify the CSRD, just because in the companies, it occupies so much time and effort and resources. And there's been this big announcement in the summer where they've come out with the simplified reporting standard that's going to be used, or that's proposed to be used from next year, and has reduced the number of indicators the companies need to report on by something nearing 50%. So they've taken a big fat cut to that. Not sure whether that's actually going to make it more insightful. So what we're actually talking to companies about is that whole insightful thing, is saying, well, compliance is going down its compliance road and it's becoming more and more seen as just a cost. And so we're really focusing around how sustainability is seen as an opportunity. And a lot of companies are very responsive to this. And they understand that the way that, Brussels is pushing them into this kind of compliance box doesn't answer that question. So we're talking about strategies, but also about, communicating a lot to clients, to employees, the switching strategies in terms of how, sustainability connects to business development, returns, financial returns. So also a very important part of that is, how that story gets told to investors, investors who traditionally haven't had that narrative. So the whole thing about sustainability value proposition is getting a lot of resonance now, with companies are kind of realizing that, they maybe in Europe posted, people got really enthusiastic in the last 2 or 3 years about CSRD being, finally would get board engagement, and actually they realize that it's, switching boardrooms off very much. So we're focusing a lot on that and looking, companies starting to get into the reporting cycle for 2025 now, and thinking, well, okay, but what else do I, need to be doing to get to really capitalize on sustainability in the business? So I know that resonates with you in terms of priorities, in terms of where the investment community is.
Look, I mean, it's so good to hear that you have these conversations with companies, because on the investment side, I mean, what we are, what I'm doing currently in Japan is more related to understanding on a quarterly basis. We engage all the companies that we're investing in, and we are running a very focused portfolio. But what we're doing is to try to understand what is the edge of the companies when it comes to a value proposition. So if you go today and ask company in Japan or in Europe or in the US, what are you actually good at when it comes to sustainability? So what we mean by that is, where do you actually make money on this? It's very hard for investors to, from the outside perspective, giving the public, these are the public entities, to get that information, because it's in many cases not really available. So from our sort of a perspective, the shift from sort of a compliance only approach to reporting and communication into something that is more value creation communication is very, very much welcome. Which is, I think, in many ways, natural step for many of the companies that have been doing their homework on CSRD and regulation in general, because somehow, somewhere, you got to get paid for this. And the question we have as investors is where that is, where exactly is it? So it's going to
And
be interesting year. Yeah.
what I like about what you said is one word that you used in particular was the edge. Well, that's two words, but edge is the word
Yeah. I mean,
that I picked out, because what you're saying is like there's maybe just one thing. I mean,
yeah.
sometimes with ESG and sustainability, companies feel that they have to kind of talk about 15 or 20 different topics and issues that come up to people, that they get targeted. But what you seem to be saying is kind of maybe actually when it comes to the investment proposition or whatever the business case or whatever the competitive advantage, however you want to frame it, maybe there's just like one thing that's really going to be that killer
Yeah.
aspect that differentiates you, that makes you interesting to customers, etc. So is that kind of confirm what I'm suggesting there?
Oh yes. Oh yes. That's exactly what we are trying to find out, because most of the companies, they think and perceive that the reporting that is done and then picked up by third parties, in many cases, third party rating agencies, that is sort of delivered to us. And based on that, we are really sort of looking at the full picture. We usually don't. We look at what is relevant for the business and what's your edge. And if edge is there and we can calculate and we can figure out what the value going forward will be and how this may impact your stock valuation, that's the something that we're going to pay a big attention to. So, going back to all of this, and this is a sort of a question that I usually ask to companies when I meet them in Japan and outside Japan. What do you actually, how do you make money on sustainability? Do you know how much this is worth for you in terms of the valuation? And
How many of them they give you an answer?
and usually they don't have the answer, and they look quite puzzled and confused. So
But what
it's
I found
yeah,
working and talking about this with a lot of companies in Europe recently, when you get to that kind of question, we don't kind of frame it the way you do, but the sense that I get is very often the clues are there, right? Companies today produce so much information and so many data points that it's kind of there, and and there's some companies say, well, if you read page 473 of the annual report, it kind of clearly states, and
yeah,
they kind of put the onus on the outside world to kind of connect the dots between these things and draw out the conclusions. So sometimes the effort is really to kind of to distill, to simplify, to pick out what actually really matters, because that kind of reporting drive that everyone is very good at and has really conditioned them is kind of, they have to say a little bit about everything.
yeah,
And what we're talking about is like, well, maybe there's just one or two things that you've really got to amplify and understand and explain and kind of draw out. So it's a kind of choosing. Sometimes inside the organization, they're just swamped with
yeah.
with information. The investor can't kind of draw those lines from the outside
I mean,
necessary.
let me give you an example. You have investors. I mean, if I look at the sector, and most of the companies in a particular part of the world are on the average quite good on compliance. I mean, risk management. They have all the principles in place, all of the follow up data and all of that. So what is exactly? And I want to make money, which means that I want a stock price to be impacted in a positive way through this. The one thing that I'm looking at is, if I'm looking at three companies in the same sector, is which of them is really good on one or two particular things that I believe, as an investor, because it's always a subjective thing, will contribute to make money for me going forward. So if companies really don't understand that, this is the sort of this discussion that we had earlier about the next stage of sustainability and ESG in general and so on. I mean, most of it's going to be about getting a lot of information about a few things and linking
Yeah.
that to what actually makes difference for business. So it is the changing tide, and in that context, James, when we talk about that, there is a changing tide a bit in Europe in terms of how European pension funds are reacting on shift of sentiment in the US. So
Right.
I mean, this is one of the news that I came across, which gained a lot of attention, and that is the news that top pension funds is pulling out 14 billion euros from Blackrock, because the BlackRock has changed their view on how sustainability is going to be managed going forward. So PFZW, which is overseeing 248 billion euros in pension assets, it's a Dutch pension fund, healthcare worker fund. They basically have decided to drop investments and ending the mandate with the BlackRock, which is, and this is to a certain degree, sort of underlying this growing divergence between Europe and the US on responsible investing and sustainability, ESG, and all of that. This is very interesting, and because it's interesting from a bit of broader perspective, and they are not the only one. PGGM, which basically manages most of this health pension fund assets, they have carried out the review which led to change of their investment strategy and sold out 2,600 companies from the pension fund, cutting its listed equity holding to 756, which is sort of it gives you a bit of a feeling that Europeans are pushing back, and it has to do with, I think it has to do with regulation in Europe, but it also has to do with the fact that European investors in general still truly believe that this adds value. So no, it's interesting news, and it's really sort of creating an even bigger divide between what's going on in the US and in Europe.
Yeah.
What do you think, James? What do you
You
think?
could almost say that there's an ocean between them. You could almost use that metaphor. And
Definitely.
yeah, and it kind of feeds into that wider narrative about kind of, I mean, that's not just in finance, but in so many other industries about, reassuring and nearshoring and sort of bringing things back closer to where you are and where also on a regulatory and legal front. Um, but even in terms of managing risks and aligning approaches, that it's very encouraging to see that kind of reinforcement of the ESG approach in Europe, and these kind of big pension funds that do move significant amounts of money and have that long-term perspective. And I thought I read that it's part of the pension fund adopting a new investment strategy where they
Yeah.
give equal importance to financial performance, risk, and sustainability. So it's not like a standstill situation for the Dutch pension fund where they say, "Oh, we've suddenly realised that they've taken actually a step forward and they're looking for to have a mandate with an asset manager that can actually can deliver that and walk that same line." So I think
Mm.
that sends certainly a signal. It's not a one-off. It's a systemic. It's a
No, but
systemic sort of shift that we're starting to see.
we need this in Europe. We need pension funds, and I think Dutch have been quite forthcoming on this one. I hope that the Nordic sort of a region will sort of follow. They used to be leaders, but not anymore, unfortunately. And the thing is that this sort of a messaging is important, but it's also important to strengthen the European competitiveness going forward, because this is one thing that will lead to other type of investments in Europe in a long-term sort of a way. So it is important that this is going to happen. Now, in terms of the divide in between the US and Europe, what is interesting is the latest number that have come out from US on the drop of investments into renewable energy. And renewable energy investments fell 36% on Trump policies. This is Bloomberg reporting on this. And basically 20.5 billion in the first half of the year from the prior 6 months, according to the report published on Tuesday from Bloomberg. Wind and solar commitments fell 18% with the period compared to the first half of 2024. And in addition, the policy changes, uncertainty around the President Donald Trump's tariffs contributed to the drop, according to this report. Now, solar and wind have become the largest sources of new power generation in the US. You have to take this into consideration. This is a big thing in the US. However, the growth leaned heavily on government subsidies, and this is also a thing we could discuss at some point. how important these subsidies are, and especially in the US. But now the subsidies have been made rolled back in a Trump's July tax and spending bill, which is of course having significant impact on the investments. In the same time, when this is happening in the US, what is also extremely interesting is that the venture capital funds are basically doing everything they can to fund and finance different kinds of climate tech slash artificial intelligence solutions going forward, which is in a way also quite contradictory in the US, because on one hand you have the US government doing what they do, on the other hand you have investors and venture capital funds doing what they can. So it's not really a clear picture what is going on in the US. And I think looking at it from a political point of view as well, it's unclear, but definitely from an investment point of view, it's becoming a quite odd situation. Don't you agree, James?
Yeah, yeah, to a certain extent. I mean, I think what you see, I mean, you've seen there is just such a radical difference between the previous administration and the current one. So those kind of numbers that you see reflect also the real proactive and very, forward-looking pro-renewables Inflation Reduction Act that had, global significance. People, was it 2 or 3 years ago in Europe were complaining, that the US was going to suck in all of the sort of financing and activities and on the renewable side, and they were complaining, that the big, even European companies were going to go and set up factories and operations in the US to benefit from it. And since then, we've had this, such a visceral uh, U-turn on that, and the current administration rolling back, as you said, those subsidies and those incentives, which are going to take time to phase out, actually, because if you've already got
Yeah.
your projects up to a certain level and you've already broken ground, you're already implementing it, you're allowed to sort of carry on. And so that negative number you've seen in the first half is obviously going to feed through and going to get probably worse in the second half and beginning of next year. While at the same time you have those initiatives to try and pump fresh capital into the sector that are kind of need to gain traction
Yeah.
outside of subsidies. The sort of just on the pure economics of it, which with the economics of so much of these technologies now is feasible. And the power prices in the US are rising, so that's
Yes.
going to feed into that dynamic because of all the demand from data centers. So yeah, it's obviously, it must be a very choppy period, and interesting from, again, this transatlantic perspective.
Yeah, it is. And there are other choppy things happening in the world which are sort of leading us into this, what I call the Norwegian contradiction. Or Norway is, of course, one of the countries in the world that is very heavy investing and continuing investing in extraction of oil and gas. And there is election happening this year, and there is a lot of debate about that. The clear statements from the Norwegian government that they will continue expanding the oil and gas extraction going forward. But that's not the topic that I want to discuss with you, James. The topic is that the US government has issued a statement basically warning Norway that they might have, or actually not Norway as a country, more a Norwegian sovereign wealth fund, which is one of the biggest sovereign wealth funds together with GPIF in Japan in the world, and they are warning the sovereign wealth fund for consequences of excluding Caterpillar, which is one of the companies that is exporting or selling equipment to Israeli government. And apparently this company has been excluded from investments of Norwegian Sovereign Wealth Fund because of the breach of international norms. This is a third-party agency that has done this for the Norwegian Sovereign Wealth Fund. But now, the one of the Republican senators is very clear on his view that Norway should be very careful and not regard business in US or visiting US as a privilege or as a right, rather as a privilege. I mean, look, I haven't seen these kind of things actually in the media before. This is one of the first time I've seen anything like this in open. It sounds very nasty, James. It sounds very aggressive. Yeah.
Yeah, and I think with all of these things, I mean, we spoke in the last couple of weeks about Ørsted and the Danish wind company and her running into problems with the US government on the wind projects there. You know, these things, there's a diplomatic undercurrent to all of these issues where nothing is taken in isolation. And I noticed, you know, the Norwegian government uh, reaffirming that obviously the central bank has jurisdiction over the sovereign wealth fund, so it's their decision and they're politically independent. It's not political, and they're really trying to distance themselves from this decision. But you know, from the American eyes, everything is leverage in terms of diplomatic relations. And in fact, that my impression was that Norway actually seemed to be doing quite a good job, and the Norwegian Prime Minister in terms of the whole oil and gas kind of narrative and butting up to Trump. So this is, you know, choppy waters for them again. And these kind of issues are really, you know, can be blown up out of all proportion
Yes.
because it's useful also to other ends from a geopolitical point of view as well. And the hot button of Israel just shows how much, you know, that issue about the position that companies or organizations take with regard to the conflict there can really have a lot of consequences, you know,
Yes.
for how you take a stand and what other organizations and governments are going to say about that.
It is going to be interesting to follow this because, yes, of course, on the one hand, you have a current finance minister, Stoltenberg, who was the NATO general secretary for many years, and
That's right. Yes.
yeah, it's very closely related to Trump in many ways. But in the same time, the sovereign interest of a country as Norway and the rights to do and deploy their money in the way they actually wish is another one. But before sort of rounding this one up, James, there is a topic I would like us to discuss going forward, and it is coming out of the COP30, which is happening in Brazil. And there was a lot of noise about COP30 a couple of weeks and months ago regarding the accommodation and the prices of accommodation apparently being very yes. But now the big push that is happening in Brazil is a push for a global carbon pricing, which is a big topic. And I think one of the underlying reasons for that is that the European Union will, start of next year, start applying carbon border adjustment mechanism called CBAM. And this CBAM will have a significant impact on the countries outside the European Union, developing countries, many of them, because they will need to compensate for the CO2 emission generated in the production of the products that are sold in the European market. So it is going to be interesting to follow this, James, and maybe we can try to touch base on this a bit more in depth next week. It is on my radar, and maybe we can talk more about what's going on with the companies that we are in various different ways engaging and see if anything has been moving forward. If you agree
Yeah.
with that. Yeah.
Absolutely, because that's going to be, again, one of these contentious issues. It sounds very technical, but it has huge ramifications in terms of trade and global relations. And the COP is going to be an interesting exchange of opinions on these issues. So everything feeds into the wider picture. So absolutely,
Yeah.
well done
Yeah.
for raising that. Cool.
Thank you, James. Thanks, everybody listening. And if you have ideas, proposals, let us know. Share this with your friends, family, and people you think should be part of the community listening to One Step Ahead Radio. James, once again, thanks for this week, and we'll talk again next one.
Yeah, have a good weekend, everybody, and catch up next time. Goodbye.
Goodbye.